This is Nightly Business Report with Tyler Matheson and Susie Gehring.
End of an era. Oracle's co-founder and longtime CEO, Larry Ellison, is stepping down as chief executive. Who's in and what's next for the software giant?
Ready or not, here comes what looks like the largest U.S. IPO ever. But there are pros and cons on the way the company does business.
Historic decision. Scotland heads to the polls to decide whether to go it alone. All that and more tonight on Nightly Business Report for Thursday, September 18th.
Good evening, everyone. More historic closing highs today for the Dow and the S&P 500 index, thanks to a strong rally on Wall Street. But we begin tonight with stunning news about one of the world's richest men and most powerful chief executives, Larry Ellison. In a surprise move, Oracle co-founder and CEO Ellison announced that he's stepping down from the top spot at the software giant to become executive chairman of the board and chief technology officer in charge of software and hardware engineering functions. And stepping up as co-chief executives, company insiders and current co-presidents Safra Catz and Mark Hurd, who came to Oracle after being pushed out as Hewlett-Packard's CEO amid sex harassment allegations a few years ago. The news came out after the market closed and shares of Oracle initially fell on the news. John Fort joins us now with more on Ellison and what all these management changes mean for Oracle. John, you know, you've been covering all of this. One thing that we know about Larry Ellison is that he's been the only CEO of Oracle in all these years since he founded it. He's a micromanager. He likes to be in control. And this announcement sounds like anything but. What's going on there?
Well, Susie, I think he's still in control. I mean, here's a guy who doesn't necessarily go into Oracle every day, but he's continued to have the engineers report up to him. He's kept his hands on all of the decisions. As executive chairman, he's still going to be in charge at the board level. Mark Hurd and Safra Catz, who are deputies under him, continue to be under him, though they now technically report to the board. So things have changed, but they're also the same at the same time. And Larry Ellison, he looks good, but he's not getting any younger. He's pushing, I think, around 70 years old. So something like this had to happen eventually.
Why and why now?
Well, I think part of it probably is the age thing. Part of it probably is orderly succession. I mean, we see Oracle in a time of transition where they're moving into the cloud era. They've been successful in the hardware business where a lot of people thought they would fail. It hasn't grown as quickly as Oracle hoped, but the margins, the profits are enormous. So now they're taking on challengers like Workday, like Salesforce, and they're bringing up these younger, not exactly spring chickens either, but younger deputies.
These are seasoned executives. Over. Is this an orderly? Has this been orderly? He didn't signal this. Nobody signaled this.
Well, Larry Ellison doesn't necessarily play by the rules you'd expect from everybody else. He still owns around 20% of Oracle, so he doesn't have to play by everybody else's rules. But if you were watching the company, you knew that one of these two was probably eventually going to take over for Larry Ellison. What surprises me is that Safra Catz took the CEO title as well, because years ago she said she didn't want to be CEO. Apparently now she's okay.
I think one thing a lot of management experts are going to be watching is whether this co-CEO structure will work. It didn't work at Goldman. It didn't work at Citi. Remember Sandy Weil and John Reed, it didn't work. So it'll be interesting to see what happens here.
Larry's still in charge. So as long as Larry's still around, he's going to keep things in line. You can be sure of that.
All right, John, thanks so much for coming by. It's a real pleasure.
Thank you, John. All right, helping lift the market today, all the buzz about tomorrow's initial public stock offering of Alibaba shares. Reportedly priced at $68 a share tonight. That is the top of the expected range and would make Alibaba the largest U.S. IPO ever. But what do investors need to know about the Chinese e-commerce giant? What are the pros and cons of a company that has people a half a world away so excited they're ready to invest billions? Eunice Yoon has more from Beijing.
To understand why the Chinese government wants Alibaba around, look no further than the village of Beishan. Beishan is one of dozens of what are called Taobao villages, farming communities transformed thanks to new job opportunities created by the e-commerce giant's shopping site, Taobao. Lu Junhong used to sell bread. Now he's an entrepreneur generating $8 million in annual sales of camping gear. Lu started his online shop by taking orders for nearby factories from a 100-square-foot room which he shared with his brother.
Some people from our village saw us and would think, How odd. These brothers are always working till very late every day. What are they up to?
Then other villagers asked for his advice. Now they can afford cars and homes by selling goods to China's increasingly wealthy consumers. The Chinese government may praise Alibaba for helping villagers get rich, but international brands criticize it for backing businesses that rip off American labels.
So does Alibaba help counterfeiters reach a broader market? We decided to look into it for ourselves. And what better way than with our own brand?
We found a Shanghai vendor selling CNBC products our company doesn't authorize. The vendor told me he makes the goods in his factory, even though he doesn't have legal authorization to use our logo.
We are not authorized. On Taobao, there are very few people who are authorized unless they have special franchise stores.
I asked if Alibaba has ever told him to stop.
No. If they want us to stop, they'll let us know.
Alibaba declined to comment on our case, but in its recent SEC filing, the firm said it's taking down counterfeits and making it easier for brands to report infringements. Alibaba, a company poised for a long-term future in China, but on a path with unclear risks. For Nightly Business Report, I'm Eunice Yoon in Beijing.
So what happens when a company like Alibaba decides to go public and begins raising money by selling shares? Here's a look at how an IPO comes together.
The road to an initial public offering, IPO, unfolds over months and includes banks, lawyers, accountants, the SEC, and finally investors. First step, the company finds a bank that will underwrite the deal and ultimately sell the shares to the public. About 6 months before the actual IPO, those bankers start writing up legal documents that begin to outline the deal. 3 months or more before the IPO, lawyers and accountants are decided upon, and bankers will begin drafting an S-1. It's the legal document required by the Securities and Exchange Commission that will tell the world about the company. Things like what it plans to do with the proceeds, the business model, the competition, corporate governance, risks, and compensation. For the largest IPOs, the S-1 is made public immediately. But for most IPOs, the S-1 is made public once it is approved by the SEC. 2 to 3 weeks before the IPO, the company launches a roadshow, basically a tour to meet investors where it announces the number of shares being sold and at what price range. The goal? Create demand for the stock by showing off a strong plan for growth that will make investors money. 1 day before the IPO, the bankers announce a final price and deal size. On the next day, the stock finally goes public. Now the price is determined by investors on the open market.
And to read more about how an IPO gets done, go to our website, nbr.com.
And for more now on today's stock market rally, investors were still feeling confident today after the Fed vowed yesterday to maintain its record low interest rates for at least a considerable time. Stock jockeys got another boost after first-time jobless claims tumbled by 36,000 last week. And with that, the Dow shot up 109 points, closing at a new record high, 17,266 was the close. The Nasdaq was up 31 and the S&P 500 up 10. Closing at its own all-time high, by the way, of 2011. Well, Jeff Kleintop joins us now to talk more about the markets. He is the Chief Global Investment Strategist for Charles Schwab. Jeff, good to have you here. Simply put, why did stocks go up again today to more record highs?
I think there's one big reason, and that's increasingly it's looking like the Scots are going to vote no. We see it in the pound today, it's up big. You can see it in, heck, the stocks in Europe were up a full % today, actually doubled what we did here in the U.S. and UK bank stocks most exposed. They were up quite a bit, up 1.3%. So I think this has been a big issue on the minds of investors. Separatist movements across the world, including in Ukraine. Here's one in Scotland, diplomatic and not military, but nonetheless a big issue because of the uncertainty it can create.
Now, Jeff, here I thought you were going to say it had to do with the Federal Reserve keeping interest rates in status quo, maybe something about Alibaba. To what extent do those news events play into the optimism on the street?
Well, they're interesting in the context of the backdrop, though I think Alibaba might be a one-stock story. Alibaba's a Chinese internet retailer. Take a look at what Chinese stocks have done over the last week. Hasn't really generated a lot of excitement with them or internet retailers. They're still suffering from relatively high valuations. They've been slumping as well. So the excitement about Alibaba not spreading to the rest of the market. I think that's a one-stock story. On the Fed, the Fed really left everything status quo yesterday with their message, and even the economic data this morning continuing to reinforce this idea that it's a kind of a Goldilocks environment. The economy's not too hot, not too cold for the Fed to change their very go-slow approach at withdrawing stimulus for this economy. You're the global strategist now at Schwab. Which part of the globe has the strongest stock market prospects over the next year? I think the emerging markets actually look the best, and particularly in Asia. One of the things that we're seeing here as we get close to pre-announcement season is fear that we'll see more like what we heard from Oracle. Whatever's happening at the top there, they missed earnings expectations, and the slowdown in Europe, the slowdown in China having an effect on U.S. corporate profits. But there are many other emerging markets around the world that are seeing much ramping up economic activity and ramping up profit growth, and at very attractive valuations. So maybe we can see those markets begin to lead.
Jeff, what do you think is going to drive markets from here? I mean, now that this Fed issue is sort of off the table, this IPO is going to be done. I mean, what are investors going to be focusing on? Is it going to be earnings or something else?
I think it is going to be earnings. I think that's going to, assuming the Scots vote no. If not, all bets are off. But I think it will be earnings. Remember, this third quarter was a bit of a messy one, and you've got a number of businesses shifting their approach and dealing with some rising costs in a number of areas. So I do think as we go through the next couple of weeks, that pre-announcement season, as companies report they may not be able to hit those targets that they thought they could at the beginning of the quarter, that's going to be the big news stories. Look for a bit more volatility, perhaps, in the weeks ahead, but no sign the bull market's over. All right, Jeff, thanks very much. Jeff Kleintop of Charles Schwab.
Some disappointing news about housing today. New home construction tumbled more than 14% in August, far more than expected, as builders put up fewer condos and apartment buildings. The good news, construction of single-family homes held steady, and overall figures for July were revised a bit higher. More now, let's turn to that vote in Scotland. As Jeff was just talking about, the polls are closed and officials are tallying up the votes to see if a majority of Scotland's people have decided whether to leave the United Kingdom and become an independent nation. Michelle Caruso-Cabrera has more on the historic vote from Edinburgh, Scotland.
Scots woke to a foggy morning as they headed to the polls.
7 o'clock, we are now open for business.
4.2 million people registered to vote in this referendum, nearly 97% of all eligible voters. Record-breaking turnout of more than 80% is expected. There's only one question on the ballot: should Scotland become an independent country? The yes vote, definitely the passionate vote. Many of those voting in favor of independence posed for pictures and brought their children so they could experience an event which could lead to momentous change.
We want them to help the kids to remember when we came to vote, because we're voting yes, and we want to, we hope it goes through, and we want our kids to remember that this was part of something, historic, and hopefully will change everything for the better forever, really.
The no vote was about fear and potential negative economic fallout from breaking away from the United Kingdom.
I voted no because I have an 11-month-old son, and he is it's his future that we're playing with here, and I kind of believe that in the long term the UK is better than the sum of its parts.
The no campaign slogan: it's not worth the risk. Many were thinking about their children, including Sir Tom Hunter, one of Scotland's richest men.
This is the biggest decision I will make in my lifetime and my kids' lifetime. So the stakes are huge.
He's been a frequent commentator on UK television to explain that regardless of the outcome, the business community must be at the table.
The point I want to make about business is governments don't have money. Governments just spend money. The only way we can afford all the things I believe in, free university education, free care for our elderly, taking care of those who can't take care of themselves, is if we have a vibrant and flourishing business community.
Some key markets moved up sharply on the belief the Scots will vote no. The British pound rose to a 2-week high, and 11 of 12 Scottish stocks listed in London also closed up, meaning the markets are set up for volatility if they are wrong.
If it is a yes tomorrow, the pound will probably fall substantially, and there could be some discount applied to not just Scottish-based stocks, but also British ones relative to where we are today.
As the Scots headed to vote today, many likely saw newspapers like this one, begging them not to leave. From London, the Daily Mirror, the Union Jack on the cover, except the Scottish blue missing, with the headline saying, "Don't leave us this way." Tomorrow, we find out if the Scots listened. For Nightly Business Report, Michelle Caruso-Cabrera, Edinburgh, Scotland.
Still ahead, why Apple's new privacy policy has some in the national intelligence community concerned. Home Depot tonight revealing just how big its recent credit card breach really was. The do-it-yourself chain says data on 56 million cardholders are at risk after hackers got access to the retailer's payment system sometime between April and just earlier this month. Home Depot also says it has been able to eliminate the malware used in the breach.
There's a lot of excitement about the brand new Apple iPhone 6 hitting stores tomorrow, but Apple's new mobile operating system comes with privacy protection that it says that no one will be able to access, not even law enforcement officials with a warrant. And that's a big worry for the intelligence community. Eamon Javers is in Washington with more on all of this. So, Eamon, what exactly did Apple do that law enforcement officials and intelligence agencies are so frustrated?
Well, the big change here is that Apple is no longer going to keep your password on hand, so the encryption on the system will be impossible for Apple to break even if it wanted to. And that means that if law enforcement goes to Apple or intelligence agencies go to Apple with a request for information on a particular target of their surveillance, Apple will be unable to comply with that request. That's the kind of thing that's got intelligence agencies here in Washington very nervous about U.S. tech companies sort of moving away and cooperating less frequently with the government. In fact, we had the Director of National Intelligence, James Clapper, here today speaking before a crowd. He said that this represents one of the biggest threats to the U.S. intelligence community. Take a listen.
The strategic environment also includes the recent factors that affect intelligence community capabilities, what I've referred to on the Hill as the perfect storm that's dogging and degrading our capabilities. The theft and leak of NSA and IC documents and loss of collection as a result. The resulting damaged relationships with foreign and corporate partners.
Now, when Clapper talks about corporate partners there, he's not talking specifically about Apple because this speech was presumably written before the Apple news, but he is talking about a concern that intelligence agencies have that they're going to get a lack of cooperation across the board going forward, guys.
So, Eamon, is this really the caption on this, how Snowden changed American business?
Yeah, absolutely. The Snowden disclosures, as you saw Clapper say right there, have really led a lot of American companies to reevaluate what their cooperation is here with intelligence and whether it's good for their bottom lines or not. And it raises sort of an existential question about what companies' responsibilities are here to law enforcement and to intelligence and to the United States versus to their customers.
Mm-hmm. What is corporate America's obligation to the country and to their customers?
You know, there's a legal answer to that question, which is that they have to follow the letter of the law, and if they get a warrant and they have the ability to turn over the information, they have to do that. And then there's sort of a moral and political and ideological answer to that question that I'm not qualified to give you. But every company is wrestling with this in a lot of spheres. Also the tax inversion debate, the questions about whether companies should have the freedom of speech, should be able to participate in political campaigns. That's a question that's being asked in a lot of areas.
Mm-hmm. And we know that everybody in the country is so worried about their own privacy and private information as well. Thank you so much, Eamon. Eamon Javers reporting from Washington. Walmart is gearing up for the holidays, announcing plans today to hire 60,000 seasonal workers this year. That's about 10% more than it took on last year. Target plans on hiring 70,000 temporary workers, the same as last year.
Oracle wasn't the only company announcing CEO changes today, and that's where we begin tonight's Market Focus. Clorox has named Benno Dorer as its new CEO, effective in November. He is promising whiter whites. Its outgoing chief will become executive chairman. Also, JetBlue's CEO is taking off. The airline's president, Robin Hayes, will take his place. Shares of Clorox popped after hours. During the regular day, the stock was up just slightly. JetBlue followed suit, also spiking initially after the bell. Well, ConAgra's profit more than tripled in the company's first quarter, while its earnings were strong. Revenue was basically in line with estimates. But the food producer said lower costs and expenses help offset that. The company also told investors that its cost-saving programs are having the desired effect. Shares were up about 4.5% to $33.48. And Rite Aid also posted strong results for its second quarter earnings. They surged, beating expectations as pharmacy sales helped drive revenue higher. But its guidance disappointed investors. Rite Aid lowered its full-year earnings outlook since it expects lower profits from generic drugs. Shares plummeted down 18.5% today to $5.41.
An analyst note weighed on shares of Sears in today's session. A retail expert at Credit Suisse is calling for the struggling department store to liquidate, saying, quote, "This is the end for the chain." He also says that keeping the chain up and running is taking away more than $10 a share in value from shareholders each year. Shares fell on that news more than 5% to $28 a share. Amazon is refreshing its line of e-readers. It unveiled 7 new devices ranging in price from about $80 to $380. They'll begin shipping those products next month. Shares rose slightly to $325. And a dividend hike to tell you about. Kroger is upping its payout by 12% to 18.5 cents a share. The company cited improving consumer confidence, and that higher amount will be paid to shareholders in December. The stock was up slightly to $52.49. And coming up on the program, student loan debt isn't just for the young. The surprising demographic that's drowning in debt at a time when they should be looking to retirement. That's next.
Americans now owe a record $1.2 trillion in student loan debt. And if that's not bad enough, the crisis is taking on a new dimension. People at or near retirement age hold more of that debt than ever before. Scott Cohn has the story.
Between orientation and graduation, a traditional college student will rack up, on average, close to $30,000 in debt.
I mean, it's expensive everywhere.
Then there are people like Rosemary Anderson. She's 57. She owes $126,000, nearly half of it in interest.
I will be working until I can't work anymore. So retirement is not on my near horizon, even though age-wise that I'm closer to retirement than I'm not.
Going back to school in her 30s and going into debt seemed to make sense. Even now, she doesn't regret it.
I don't feel like I should be ashamed of having gone to college to try to better my circumstances or for having a better life for myself.
But then she got sick, got divorced, got in over her head in credit card debt. She hasn't been able to make a student loan payment for 8 years, and the interest at 8.25% keeps piling up.
The fear is always about that bottom line, which literally grows daily. The interest grows daily.
Americans 65 and older owed less than $3 billion on student loans in 2005. Today, it's more than $18 billion, and they're more likely than other age groups to be in default. Student loan debt can be crippling at any age, but especially for older adults who've built up all kinds of other debts, have fewer sources of income to pay it off. And under the law, if they fall behind on their student loans, the government can take part of their Social Security. Still, colleges typically make no distinction between older and younger borrowers. Now they're starting to rethink that.
It's important for colleges, universities, financial aid administrators to be thinking about ways that they can experiment in getting information to them that will be effective in helping them manage their loan debt as they leave school.
I will be indebted for life.
But Rosemary Anderson, who testified before Congress on the issue, says better counseling for borrowers is just the start. Other proposals include streamlined repayment plans for seniors, more controversial, allowing them to refinance or just lowering the interest rate. But for now, it's clear this crisis is no longer just for the young. Scott Cohn, Nightly Business Report, Santa Cruz, California.
Fortune magazine is out with its annual list of the 50 most powerful women in business, and half of them are CEOs. Starting with 5th place, Ellen Kullman, the chief executive of DuPont. In 4th, Lockheed Martin CEO Marilyn Hewson. Longtime Pepsi CEO Indra Nooyi is in 3rd. In 2nd place, Mary Barra. She took over the steering wheel at General Motors earlier this year. And in the top spot for the 3rd year in a row, IBM CEO Ginni Rometty.
And finally tonight, we end the show with more on tomorrow's initial public stock offering by Alibaba. Wall Street may be buzzing about the IPO, and Alibaba may indeed be a household name in China, but as you'll see, here in the U.S., a lot of people are not looking forward to its debut tomorrow, and many don't even know what Alibaba is.
Alibaba? I have no idea.
Alibaba? I have no clue.
Alibaba was a character, an Arabian character.
I think he dates back to the 16th century.
Alibaba. In the 40 Thieves.
Yeah, 40 Thieves.
I don't know.
Is it a religious holiday or a person?
Something with it in Asia.
Alibaba.com, where you can find all the products from China.
Alibaba is the Chinese version of Amazon.
Alibaba.
Alibaba.
Alibaba, where?
That's
A
entertaining.
religious holiday? That's pretty good. Well, maybe we should...
I think one out of all of them knew what it was.
Knew what it was. Couple did.
You know, in a few more days, everybody will know what it is. That's my prediction.
Pretty much.
That's Nightly Business Report for tonight. I'm Susie Garrett. Thanks so much for joining us.
And I'm Tyler Mathisen. Thanks from me as well. Have a great evening, everybody. We will see you back here tomorrow. And we know what Alibaba is.
I'm Susie Garrett with the Nightly Business Report News Brief. Stunning news about Oracle co-founder and CEO Larry Ellison. He's stepping down from the top spot at the software giant to become executive chairman of the board and chief technology officer. Replacing him, 2 company insiders become co-CEOs. On Wall Street today, more historic closing highs for the Dow and the S&P following the Fed's decision to keep interest rates low, investor buzz about Alibaba's initial public offering on Friday, and good news about jobs. The Dow shot up 109 points, the Nasdaq added 31, the S&P rose nearly 10 points. And Apple is out with a new mobile operating system with deep privacy encryption software, so deep that it locks out law enforcement and even itself. Be sure to tune into Nightly Business Report right here on your public television station.